Hello and welcome to Stock Market Fever. This Tuesday, May 31st, after the market closes, another big-name tech company will be reporting quarterly earnings. Salesforce has confirmed they will announce their first quarter earnings after the closing bell. As this earnings announcement comes right after 3 years of solid revenue growth, might we expect more of the same from Salesforce? Or will Salesforce report a swing and a miss and produce a weaker than expected report or future guidance? In this video, we will explore where Salesforce has been over the last 3 years, what it has been doing recently, and where analysts see it heading moving forward. And you'll definitely want to stay tuned to the end as we wrap things up with our own prognosis and forecast for Salesforce. Salesforce boasts of being the world's #1 customer relationship management platform. Their cloud-based CRM applications for sales, service, marketing, and more don't require IT experts to set up or manage. Simply log in and start connecting to customers in a whole new way. More than 150,000 companies use Salesforce CRM to grow their businesses by strengthening customer relationships. And Salesforce helps companies understand their customers' needs and solve problems, managing customer information and interactions, all on a single platform that's always accessible from any desktop or device. CRM software centralizes client data management and automates sales and marketing activities, and demand for Salesforce's CRM has been steadily increasing. Cloud-based CRM software has grown at an unprecedented rate among small to medium-sized businesses, owing mostly to the rising demand to manage customer experience and retain new customers. And with the worldwide growing demand for Salesforce's CRM came impressive revenue growth. Salesforce revenue grew from $17 billion in 2020 to $21 billion in 2021 and over $26 billion in 2022. And Salesforce earnings have also been rising rapidly from $1.1 billion in 2019 to just over $4 billion in 2021. But Salesforce shareholders have been taken for a wild roller coaster ride. If you had purchased Salesforce stock 3 years ago, you would have seen your cost of just over $150 a share skyrocket to over $300 just last October, only to fall crashing back down to earth, closing at $162 on May 26th. And if you bought Salesforce this year, you would be down over $91 per share for a 36% loss. Ouch, that's got to hurt. But what about Salesforce earnings and share price forecasts? Industry analysts are generally very bullish on Salesforce. Out of 45 analysts covering the company, 41 rated Salesforce either a strong buy or a buy. On May 2nd, when the shares were trading at $218, CFRA analyst John Freeman awarded the company with its highest rating, 5 stars, strong buy, and a 12-month target of $357, seeing this as an attractive valuation for one of the most disruptive innovators in software and the largest pure beneficiary from cloud migration. He was impressed with Salesforce's 10-year record of successful M&A and software integration, and impressed that their service offering is now by far the most comprehensive and feature-rich for customers ranging from medium-sized businesses all the way to the largest enterprises. But Freeman's target price of $357 was set in March, before the overall market meltdown. Coming on the heels of out-of-control inflation and an aggressive Fed raising interest rates and subsequent fear that the U.S. and world economies would be spiraling downward into a recession. Taking a more cautious note in light of the market sell-off, analysts have been maintaining their buy and outperform ratings, but lowering their targets from 270 to 300 all the way down to around 225. Even more pessimistic outlook, Zacks has lowered their rating to sell, and as of April 22nd, Market Edge Second Opinion rated Salesforce a void. But where do we at Stock Market Fever stand? We're not afraid to take a stand. We're actually very brave to do so. We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. And, in our opinion, while Salesforce could conceivably beat its consensus quarterly forecast of 95 cents for the first quarter, we believe the risks of a market smackdown in the face of a potential weakening in guidance is too great for investors looking for the short term only. The market has been brutal to stocks this year, sometimes even after reporting great earnings, like with Tesla. And for companies that report good earnings but weak guidance, the market has been absolutely unforgiving. Also, given its current high price-earnings ratio of 108 and forward PE ratio of just under 35, we think the price may have gotten a little bit ahead of itself, and the stock could be vulnerable to continue to descend in the short run over the next few months. Yes, Salesforce is a great long-term investment, but in the short run, we would mark it as a void before earnings. We feel the stock could go down to the $145 range if the overall market continues to go down in the face of more bad economic news, as the stock has a beta of 1.17, which means it will closely follow the overall market. That's what we think, but what do you think? Where do you think Salesforce is heading in the short run and long run? Would you recommend buying, selling, or holding? Please leave your thoughts and comments below, as we'd love to hear from you. Please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.